Hello, everybody. Welcome to The Enlightened Investor, broadcasting from Peoria Heights, Illinois. We find ourselves in difficult, choppy times, Mike, and this episode is on, are we headed toward a technical recession or a recession in general? What's your general thoughts on that?
Technically speaking, no pun intended, no. I'm not a prognosticator, but I would just say that we're long overdue for a recession, just like a market declines. It's something, it's cyclical, all that, right? Correct?
Yeah.
And trying to navigate the Federal Reserve, it's like trying to navigate the Titanic in the dark without radar through the icebergs. And my guess is maybe we won't have a deep recession, but I think we're going to have a recession. But I don't know.
Yeah, that's kind of consensus, right?
My guess,
yeah. So like maybe a mild recession is kind of needed, right? Like,
who knows, right?
It's like when we had COVID, we had that short recession. It was everyone had to kind of agree that we weren't going to have a recession because of COVID, and we just stimulated it up.
Won't you agree? I mean, there are so many moving parts to the economy, and along with global events that we have going on or could be going on, to try and make any forecasts, just like the markets or interest rates, there's so many moving parts. And yeah, a few may get it right, but is it going to be because they were lucky or they were brilliant?
Skill.
Yeah.
Let's take a look at these moving parts really quick, folks. And then
this is more your take today. This is economic stuff, but I'm here with you.
This is the best topic.
I'm here. It's the best stuff.
It's the best stuff. It's all economics. Great stuff, folks.
That's good.
So,
can we talk about your putter? No.
Oh yeah, we got to talk about.
Okay.
Well, thanks for staying with our crazy banter, folks. Because at the end of we'll talk about the possibility of this technical or paper recession, and then at the end we'll take a look at maybe some investing strategies for you, which we've kind of talked about in the past, but. So really right now, I think, honestly, I hear it at the baseball fields, or my son plays baseball. You might hear it at the golf course with your buddies playing golf or biking, your 40 miles, whatever, tonight. There's just a lot of fear and uncertainty right now.
I love to talk about macro environments when I'm writing.
I'm sure you do.
Yes.
So
I'm really messing with you today.
Yeah, thanks a lot. There's some bad, sour news out there. Number one sour news is that consumer sentiment is really crashing. It's at an all-time low. So people's view of the economy today and also the future is pretty weak. And even though the job market is very strong,
$6 gas will do that to you.
Yeah, no kidding. Yeah. No kidding. Also, we find that commodities, like what's good, what's rallying right now. It's definitely not commodities. We've heard that the oil and gas has been through a big surge, but oil's down 14.1% from its high. Natural gas down about 33%, nickel, wheat, copper, all in bear markets, not only just the equity market, but also commodities. And on top of that is the Federal Reserve is just starting their tightening, right? We all had to kind of agree, as I was mentioning earlier in the episode here, that we couldn't have a recession when we went through COVID. So we all agree that, hey, the little Gangnam Style song is kind of, we all have to love that. And we all have to agree that we can't have a recession, but you can take a look at what's happened to the Federal Reserve and their balance sheet. It blew up, and now we're just starting to tighten right here in 2022, just starting what happens when that starts to decline. So the last couple of things is, are we heading to a recession? Well, no one knows for sure, as Mike was saying, but the Atlanta Federal Reserve does put out a monthly report, and this is, they're evaluating their GDP now, and you can see that as of today, this is like June 29th, 2022, they're looking at a GDP second quarter result of about 0.2% versus the estimates, the blue chip consensus, about 3%. So that's a big difference, looking at the what the Fed's saying. So if we get one more negative quarter, Mike, if it's quarter number 2 comes in, that'll be reported on July 28th. If we get negative, that's going to be technically a recession. So, and anyways, what happens to equities when we enter recession? Obviously,
the market's forward-looking, so we're already seeing that it's already occurred.
It's already kind of built in the market.
How far we're going to go?
Sure.
Yeah.
And multiple compression. We always talk about going back to the average, right? Like in the long run, things revert to the mean.
Sure.
So how about like PE ratios? I don't care if you're talking about CAPE ratio, PE ratios, the Warren Buffett indicator. If you go back to the mean, folks, usually the PE ratio mean for the S&P 500 is about 16, right? And right now we're at about how much? About 19, right? Mm-hmm. So we still have a little ways to go, but the question is, we can overshoot that to the downside as well as going to the upside. So last time we really went through like an inflationary period was like at the end of 1970s into the early 80s, and that compressed all the way down to 9. The P/E ratio did. So I mean, I don't want to scare anybody, but you could definitely. It doesn't have to stop.
We could have a long way to go. Who knows?
It doesn't have to stop at 9. And we were talking about that 4%, withdrawal rate in our last episode, and many of the yields, nominal yields, are well below 4% right now. Whether it be global equities, U.S. equities, bonds, real estate, balanced portfolio, it's a tough time for retirees and light investors to know what to do. But it's really about that planning.
Well, and you got to keep a longer term view as well. We don't want to drill down right there and make decisions upon them.
Mm-hmm. Mm-hmm. So look for maybe inflation to break a little bit in the second half of this year. And the reason that it might break is probably because we might go into this recession. And that's not a good thing. It's like a demand destruction, but it might help us with inflation. And even some of the gas prices and housing prices. And when we break inflation, what happens to overall returns when inflation breaks?
Well, eventually you're going to have some good returns again.
Yep. Stick-to-itiveness is part of stick-to-itiveness is part of being a good investor.
Yeah, exactly. I mean, that's what you kind of get. I guess my segue at the end here is we get to talk about what do you do investing wise, because we're headed to a recession. I have a golfing buddy of mine who has told me, he's not a client, but he says, you had financial advisors. He was mad because he says, I told my guy 2 months ago to get out, and I'm in still. Mm-hmm. And I tried to explain to him. I said, yeah, that was good advice he gives, and what we all give when we tell you to stay there, because you got to be right twice, and it's really easy when things start to get bad to kind of feel it in the air, and you can get out maybe at some point before it gets worse, if it's going to get worse. Mm-hmm. But it's really, really tough to be right that second time
when
because
you get back in.
Back in 2020 is a perfect example. COVID hit, the market went down quickly and a lot, but it came back really quickly as well. Yep. And if you go back to 08, 09, it went down a bunch, mm-hmm. and it came back very quickly in the spring of 09. And if you get in, you're going to miss it. And that's the whole thing when you get into the investor gap and lower returns. It's playing that market timing game, and maybe you get it right, but you better be really lucky.
Yep, market timing is a tough proposition, right? How many hedge funds are going to be going broke here now?
Right. So. Yeah. But somebody's going to get it right, and they're all going to wave their arms, and everybody's going to claim them to be the next genius for investing. Yeah. And
well, it's funny, Mike, isn't it? Like Kathy Woods has $600 million of net inflows into her fund, even though she's down over 50% this year. Yeah, amazing. Well, folks,
chasing past returns.
Yep, that's right. Yeah. And the market's forward looking. So, anyways, folks, I wish we had some better news to tell you on the economy.
Go try it out.
Yeah, let's kind of maybe grab my putter over my time. Makes me feel good. So, happy birthday to all you people that have July birthdays. And we're glad you are here watching this videos with us. And Mike and Joshua signing off. Take care, folks.